Good morning, everybody. Welcome to Mastering Cannabis Accounting and Tax Hacks. Today with me I have Peter Lipinski, who is the VP of Finance of Sunburn Cannabis. I've got Joel Mueller, franchise owner with Dope CFO. And I've got Nick Richards, who's an attorney with Greenspoon Marder. So we're going to be giving you some insights and some really good topics for discussion today. We intend to have a little bit of a Q&A at the end. I think some of these topics are well worth having you all chime in and kind of ask some questions. We figured we would go ahead and steal a little bit of thunder today. If any of you have a Florida address or potentially some Georgia, North Carolina addresses, just remember that you get disaster relief and your tax return is not due today. So we had told some people yesterday and they didn't realize that. So be aware of that disaster relief extension. It may make your day if you're trying to do it last minute. So I wanted to start today's discussion kind of related to the current financial environment that cannabis is operating. As we're aware, we're in a little bit different economy. Cash is really, really tight. Debt is really hard to get, and really honestly, the interest rates are high. And so I wanted hopefully to have Paul and Joel kind of give us some insight related to how are we managing cash? How are we able to maximize our cash position? What are we doing for our debt management in the current environment we're in?
You want to start, Peter, since you've had to?
Sure, I can jump in. I mean, in the current debt environment, you're looking at something that's coming up in the next 2 years here. There's over $2 billion that's going to be coming to maturity. So those of you who don't have these things dialed in right now, it's something you really need to look at. What we really focus on is how can you make yourself cash flow positive? It's such an important thing right now. There's so many groups out there that are not cash flow positive, that are relying on debt, that are relying on additional investors. Everything's drying up. I mean, we're coming into a penultimate moment between rescheduling, between a Florida vote down here, that hopefully this is all going to boost it, but you never know in cannabis. So the biggest thing is just cash flow positive, slimming down your operations as much as you can if you have to, and efficiency from a farm standpoint. The more efficient you can be there, the more you're going to be able to generate that cash.
Yeah, I've been working with a lot of cannabis operators, and it's about having your fiscal house in order, current financials, projections, to be able to take advantage of any debt lending opportunities or equity investors that are out there. So it's always keeping your financial fiscal house in order, making sure you have current financials, reoccurring GAAP financials to be able to present to your debt lenders or potential equity investors. I'm seeing that the cash market is very tight. People are saying survive to 25, and then we'll get some legislation going through here, and then hopefully the capital markets will open up and make cash available. But to Peter's point, it's how efficient can you be in looking at your financials and doing financial planning and analysis to be able to do your GAAP accounting, to allocate your costs to COGS, to lower your taxes, and then that's where Will and they take over as the tax experts to be able to defer your tax payments or potentially defer your non-deductible costs for future years.
Peter, you mentioned operating efficiency and really being able to become profitable. In my experience, I've seen a lot of cannabis companies that really struggle even to get to positive gross margin. Right. So maybe what are some things we can really evaluate to get to that, getting into the black? Like, how do we get into the black? How do we maintain it? And then on top of that, how do we manage the G&A and the overhead as we grow? Because isn't the ultimate goal really here to grow the business and to maximize owner value?
I mean, the goal is always to grow, obviously. But you got to look at it. Cannabis doesn't have the capital backing that you have in all your other industries. To be able to grow, you have to really look at your pro formas and be realistic with it. I've seen so many groups out there that put forth these forecasts, and you're going, I mean, I really hope you're hitting these numbers, but is it realistic? Are you actually going to hit? And they're planning expenses based on those revenue numbers. So it's being realistic with yourself. What are you actually going to be able to produce? What are you actually going to be able to sell? And then from there, understanding what you can actually look at from a G&A perspective. And there's a lot of hard conversations that have to be had. You know, need versus want is a huge thing here. So being able to reevaluate and look and have those hard conversations with your own organization, and it may mean you're cutting out chunks of a business because you need to allocate those elsewhere to become cash flow positive.
Yeah, we tend to look at it in three ways as well. What is your gross profit margin? What is your operating income margin? And then what is your net income after taxes? And you can look at those three chunks. Are we allocating cost of cost goods sold properly? Once we do that, then we can look at our operating expenses and how do we become lean? How do we become more efficient? And I think a lot of the clients that I'm working with are automating a lot of their processes, especially in and around packaging.
That's all very, very helpful. Thank you for sharing all of that insight. I think that also brings us to another point of when we talk about cash, how do we access some cash? There's a pretty big push in the marketplace right now for cannabis companies going back and claiming tax refunds. And it started with Trulieve. Nick, maybe give us some insight into what the industry overall is doing and how has this really come about? Like, is this really something everybody in this room can evaluate to take advantage of?
Yeah, you know, I'll take off from that last topic a little bit, right? The industry just couldn't borrow for the last 3 years, and they borrowed from the IRS. And then this year they've decided that maybe we don't have to pay the IRS back, right? And that's the fight we see going on right now. It really started actually, 280 is a sad story, right? And the news got a little better in 2018 with a code section called 471C. Smaller businesses can qualify for 471C, and industry operators started taking advantage of it and using it to reduce 280E fairly dramatically. The big guys couldn't do that because they don't qualify. It's a small business exception. And a couple of years ago in a case called Standing Akimbo, Supreme Court Justice Thomas made a statement that a case called Gonzalez v. Resch may no longer be good law because the facts have changed. That's a long story about constitutional law and all this difficult stuff that I put people to sleep with all the time. But what got the attention of is a large law firm that started courting the industry to get together a fund to challenge this U.S. constitutional case, right? This Supreme Court case. That's a case now that's in Massachusetts called Cannabis Provisions. Trulieve was part of those discussions. And right about that time that case got filed in Massachusetts, Trulieve just went and did it, filed amended returns back to 2019, asked for $150 million back based upon the position that 280E didn't apply. And lo and behold, a few months later, they got their money. That got a lot of people's attention, started, and it really kind of, it opened up the door for companies to start doing that, and also for accounting firms to start to feel more comfortable about being comfortable with that, right? And that starts a process based upon this case called Cannabis Provisions that a lot of company takes the position that, look, we can take a position on our tax returns that there's a reasonable chance that this is going to work. And so with a reasonable chance, doesn't mean it's going to work, but it does mean that we can take the position on our tax return and disclose it to the IRS. And by doing that, we avoid penalties. It's part of our system. It's the way our tax system works. It's confusing, right? And so our system recognizes that taxpayers should be able to take a position that could turn out to be wrong, so long as it's not frivolous and it's reasonable, and not get penalized for it if they are up in front about it and they disclose it. So that started happening, and that was around this time last year, right? And then suddenly rescheduling happened as well. And rescheduling opened up a new position on which perhaps 280E may not apply. And interestingly, Will, the last group seemed pretty doom and gloom about rescheduling, although everybody was for it at the end, right? I'll just tell you, we're already taking the position that 280E's gone. I think that was the one thing that they liked about rescheduling. Not sure what that does to that conversation, but that HHS memo that came out in August of 2023 when it was leaked, what it says is that marijuana does not fit the definition of a Schedule 1 or 2 controlled substance. And what Section 280E says, it doesn't say that it applies to substances that are scheduled as 1 or 2. It says it applies to substances that fall within the definition of Schedule 1 or 2. The federal government just said it doesn't, right? So that was a new, powerful tool that came into play on, at least in the 2023 year when the announcement was made, and started showing up in a lot of our positions moving forward. And it may even help a little bit more because, check this out, also part of that rescheduling was the Office of Legal Counsel report. And that Office of Legal Counsel report was necessary because, we had fears that we were going to violate treaties and all this different things. And what also were concerned about was the 2016 decision of the DEA not to reschedule marijuana, right? And if you read those rescheduling, guess who didn't put those regulations out? DEA, right? Normally those regulations come from the DEA, but the DEA said no in 16, and they said no in 23 too, it would appear, and the Department of Justice had to do it on their own. And that Office of Legal Counsel memo states that 2016 decision to deny rescheduling was based on the wrong test, right? And that test is critical, right? That is the test to determine whether it is a currently accepted medical use. That is the single distinguishing factor of a Schedule I drug. That's it. A Schedule I drug is a drug that has no medical use, right? And if you have a medical use, you at least get to 2, and then there's the decision about where do we go, and that got us to 3, right? As soon as we corrected that incorrect test in 16, we got to 3, right? So there's a good argument now that perhaps that rescheduling should go back and should be used to go back as part of our defense in filing these amended returns and seeking the return of Section 280E. May not work. It's a question of risk. Companies have to understand their risk. What are you doing? What's at play here? But a lot of companies are doing it. Some of them are getting money back, it's an exciting. I got the white suit on today, right? Don't have to be the bad guy so much anymore.
Now, it's good that you bring up risk, because it's my understanding the IRS actually issued a notice fairly recently that said, don't go do this. This is really bad. Don't take these positions. So is this something that we all in this room should still be considering?
The things that the IRS says are remarkable, right? And it's oftentimes what they don't say that's really interesting. One of the things they didn't say that I thought was very interesting is they didn't say anything about your current return, your 2023 return. They just talked about amended returns. And I wonder if they're thinking about that HHS report as well, right? Who knows? But what they said was, look, people filing amended returns based upon the position that rescheduling will be retroactive are wrong. Can they say that? Sure. Does it mean anything? No, it doesn't. It's just there what they said, right? At the same time that all that happened, we got a great decision out of Canada Provisions that the argument that the industry is using, it was, quote, persuasive, right? And now we'll be in the appeals court after that. So it's funny that those two came together. The reason why that happened, though, I was an IRS trial attorney for 10 years. And I still have a lot of friends there. When that notice came out, we called up that other thing that happened 2 weeks ago was an attorney, Luke Ortner, who was in the press recently about we're going to collect every dollar, right? And we called up Luke and we said, Luke, what's going on with this notice? And he said, Nick, we have received tens of thousands of amended returns, right? That got the IRS's attention.
That is definitely an attention grabber. And so if somebody in the audience hasn't pursued an amended return position in the current state we're in, do you say, hey, reach out to counsel, find somebody like myself to pursue this, let's look at what you have, let's look at your facts and circumstances, and then let's talk from there? Is that the correct approach for the audience?
Yeah, it is. And I want to say, first off, it's a partnership, right? There's nothing stronger than a good lawyer and a good accountant working together. And that's what this is really. It's a partnership of lawyers and accountants like Will working together to take a position that's risky and to do it in a responsible way. And you need to understand the issue. You need to look at it and decide whether you need to pursue it, at least protect your ability to benefit it, should it work. And what's at issue here? You might have just lost 2020 as an amended return. You got 3 years to file an amended return after an original return is filed, right? So that you probably could look at 2020 now forward, and certainly now 23 is a much stronger argument, and now we're into 24, right? So there's really something there, and it's really important to get smart about it.
That's very helpful. I really appreciate the insight for my own sake as well. So we've talked about the current environment. Let's shift a little bit towards the future state. Because as we all sit here, we know that our industry is changing. Our industry is still in its infancy. We've got a lot of things on the horizon. We've got these big amended return positions that have come out. We've got historical lending that's a little bit tight, hard to get capital, hard to get financed. But now that we've got rescheduling on the horizon, and I like to call it descheduling, because it opens up just a whole new world for the cannabis industry. And what I'd like to hear a little bit about from Paul and Joel is, what does this mean operationally for cannabis? Are we going to have access to new capital markets? Are we going to have access to new financing? Are we going to have ways to increase profitability of our businesses?
I think what you're going to see is an influx of PE money. I still don't think you see your big banks coming in. If they do, they're going to lend on real estate only. It's going to be traditional lending. It's going to be lending on real estate numbers that are non-cannabis specific. So what may be a cultivation facility worth $50 million, they're going to lend $10 million on because it's nothing but a warehouse. I think that you're going to see, though, like I said, an influx of PE coming in. I think they're standing at the gates waiting at this point. And yeah, absolutely. I think that gives everybody in the industry the ability to scale with much cheaper capital, build in those efficiencies, go ahead and buy the equipment that you need to be able to run at scale and efficient, get the softwares you need from a back office standpoint. I mean, to automate a back office, an accounting office specifically, you can cut multiple people out, speed up your timelines. That's the key. So yeah, I think PE is going to be where the money's coming from, though.
Yeah, I think with descheduling, you're going to open up capital to be able to invest internally in the items that you've talked about. Automation is key. I'm definitely seeing a lot of automation in the back office and reducing FTE counts, keeping those costs down. And then as far as the lending market, I think still in the debt sector, you're going to still need to have collateralization for debt, be it a personal guarantee or security on property, plant, and equipment, or some sort of security in your collateralization. And then hopefully with investors and equity potential, equity money coming in, that will open up the market, because then with descheduling, you're opening up new markets, and hopefully we'll see that second green wave come.
I think I'm the risky guy up here, right? I think one of the things that we're going to see people looking to pursue, there's a theory out there around the 280E capital asset, and this idea that if 280E is constitutional under the 16th Amendment, that really means that these costs, they don't disappear, they just can't be deducted, and so they get carried forward. And I've been encouraging every accountant I know to put those costs on the balance sheet and carry them forward, because it could turn out that once 280E goes away, now those costs can be used, maybe deducted, or maybe when you sell your business, those costs are now basis, and you can recover those costs on the sale of your business. It's really important to get your head around that, because things are going to start moving really fast. We're going to all start making good money, and 3 or 4 years, you're going to sell your business, and you're going to look at your basis, and it's going to be zero, and you're going to be wanting to not pay capital gains on all that money, so you could come down and buy a nice apartment here in Florida. And that basis calculation is extremely important. It's really hard to prove at the end of a long time in a business, right? Those 280E costs, you should be gathering up those now, recording them, and looking for a way to realize them down the road. I think that starts to emerge that's our sort of no 280E 2.0, right? That's the next big fight. And guys, there's billions there, right? There's so much money there.
So Nick, just to give you a practical example, yesterday we filed for a client, and I was working with our CPA to file the tax return, and we had the Schedule M1, and we had $250,000 sitting on M1 non-deductible costs. And I'm like, well, can we do the 280E capital asset? She's like, well, there's not really any guidance. And I said, let's roll it to the balance sheet. So in future years, when we do sell the business or a piece of equipment, you have a basis.
There's almost no risk, right? There's no tax effect by just recording it, right? And look, I could be wrong, but if I'm right, it's then rescheduling really starts to look good, right?
So any position that you take, to your point earlier, you just need to document and rationalize document your position on your tax position. So if down the road, if you become audited, which you will, you can properly disclose your reasoning for your tax position.
What Nick is really getting at with this is it a temporary difference or a permanent difference? Permanent differences would not ever be deductible in future periods. So the reason it would impact your financial statements is most cannabis companies historically have treated 280E as a permanent difference, which is a rate impacting item. There was no deferred tax asset established in the financials. A lot of cannabis companies, if you look at the big filers, the big public filers, we do a lot of assistance with those. But essentially, they don't recognize deferred tax assets or deferred tax liabilities for future items that are related to items that would be wrapped into 280E, because of the fact that a lot of time they said, well, it's never going to be allowed in a G&A deduction, so we're never going to capitalize that. So what Nick is really getting at is, should we have had some type of temporary difference on the balance sheet other than a net operating loss carry forward? He's not saying whether or not he believes that is an amortizable deferred tax asset, but he's saying it could be used as additional tax basis upon the sale of assets or business, which inherently would reduce a future gain if you were to sell. So that's what he's getting at. We do a lot of help with cannabis companies in ASC 740, IAS 12. It is a very complex area on how to account for a lot of this, so we do a lot of consulting in that. And that's really essentially what Nick's getting at is, how do I account for this? So it's really more of a financial statement benefit that would be picked up versus a true cash tax impact from this until it gets sold. So I think that's extremely helpful to understand and to hear. Obviously, as we talk about rescheduling, it's really a big word, because it just opens up, new financing, new capital, but I think it opens up a new tax world. Historically, cannabis has not been able to take R&D tax credits. They haven't been able to take any type of ITC or PTC. None of these have been available. Nick, maybe talk to this a little bit. And if 280E doesn't apply, what should we be evaluating?
Yeah, 280 applies to deductions and credits, right? So if 280 is gone, credits are also opened up, and those folks that are going back and filing amended returns are often taking those credits as well. There's a lot of money there, right? And there's a lot of opportunity when that we know for sure it goes away. There's a lot of equipment and expenses and solar panels and all that stuff in the cannabis space, right? Cannabis space is perfect for these credits in so many ways. They're in less affluent neighborhoods, right? And all that stuff, right? So there's a lot of opportunity there, and then there's a lot of opportunity there's people that are doing it already, right? Your real estate company, put some solar panels on and do that kind of stuff. It's always not quite as good as it could be if we were just able to do it without having to, do the head fake, So it's going to get a lot easier. People are going to be a lot able to do it, and that's another profit generating driver that's going to be significant. I think Will, I think you showed me some math one time where there was about a 40% return on some of these credits.
That's absolutely correct.
Yeah.
So if you look at it from a sense of cannabis has never really been able to explore the benefit from an R&D credit. These are a lot of things cannabis companies are already doing. Those are just additional benefits that you can use dollar for dollar against your tax liability. And you're already doing a lot of it. There's the potential, haven't investigated it thoroughly, that maybe if you look at Arbor Day Foundation, as they plant trees, they get carbon sequestration credits. Maybe there's a parallel to planting cannabis. Is there a carbon sequestration credit available for that? Because it's essentially pulling carbon out of the air. It's doing a lot of what planting trees does. If you take your grow operations and you install any energy efficient, solar power, hydroelectric, wind, if you're doing something of that nature, there's energy credits that are available. A lot of folks in cannabis don't realize that Inflation Reduction Act a couple of years ago significantly changed the credit landscape. And that's because it made certain energy credits transferable, meaning you can now monetize them by selling them to a third party. So all these companies with solar panels, all these companies with wind energy, wind turbines, if they're in losses and can't use that credit on their tax return, they can still monetize it by selling it to another taxpayer. All they have to do is register it with the IRS, and it makes it transferable, all under the Inflation Reduction Act. So let's say your cannabis company is in a position where you have losses. Well, maybe you can't use the credit, but you can still get cash in the door, because we're talking about cash is king. Cash is so important. Cash is so important to our business. Well, if we're doing some of these things and we can get cash for these credits, that just does nothing but help us. So the monetization of that, there's also direct pay for certain production credits. Certain credits get paid directly to the taxpayer. So those are extremely important to be aware of either. This is a whole new realm cannabis has never been a part of that is extremely important to know going forward, because there's so much opportunity to maximize your cash position. It becomes more important with your financial statements in 2025 and 2026 because ASU 2023-09 was issued by the FASB. And what this does is it changes your income tax disclosures. You now have 8 categories for your effective tax rate. Those are the set categories, but any item that arises to 5% or more is required to be separately disclosed by jurisdiction. So you're going to have a drill down into every single item impacting your effective tax rate. Any lender or user of your financial statements is going to see exactly how you're managing your tax rate. And it's going to become evident whether you're on top of it or you're not. You're going to have to disclose income taxes paid for the first time. They've never made you disclose that before. How good would it look to show that you settled your tax liability for 80 cents on the dollar through purchasing of energy credits if you didn't create any? That's efficient cash management. So when you look at the transferable marketplace, energy credits are selling anywhere from 70 cents on the dollar to 90-something cents on the dollar. Obviously, if we're producing them and we're having to monetize them, we want to try to get more towards the 95 cents on the dollar. But if we're not producing them, we're not creating them, then we need to look at how do we minimize our risk and get them as cheaply as possible to settle that tax liability. Because this has never been allowed because of the fact that 280E, as Nick stated, has restricted us from being able to leverage any of these credits on our tax returns. Yeah, we got some ERC, and we had some things that are payroll related, but this is going to open up a new world. One of the large practices in our firm also is if you're looking to expand, state and local government incentives. You look at certain zones. If you're going to go build a new cultivation facility, if you're going to create jobs, we assist companies in helping negotiate credit packages, payroll tax reductions, income tax reductions, franchise tax reductions, help you do that so that you get that benefit. Historically, cannabis has never been able to do that. So it's just going to be a whole new world from a tax perspective that a lot of other businesses have already been in. cannabis really hasn't been allowed to play in that space yet. So it's got a whole lot of benefit. I think one of the sexy terms in accounting and in tax right now is robotics and automation. You know, how do we efficiently automate systems and automate data to drive our decisions, drive our profitability, drive our results? So how do we get a hold of that? And I think hearing from Paul and Joel is important on this. How do we leverage technology, automation, robotics? How do we leverage that to make our systems and our reporting most efficient? Because in my experience, cannabis isn't the most efficient. And I think cannabis struggles a little bit with being able to take technology and apply it to how we're reporting.
No, I would 100% agree that cannabis is not efficient when it comes to technology. My background's from the banking sector and then from higher education, and those are two groups that are extremely efficient when it comes to tech. You look at cannabis and what's a back office running? QuickBooks? Sage if you're lucky. You know, they don't have the efficiencies that you would have in a normal software package. So whatever you can do to take advantage and build up, and whether it's changing packages or adding on plugins for it, yeah, automation is going to save you time, money, you name it.
Yeah, so, Will, I just want to add back to 280 going away. You know that your tax is computed on your gross profit. So if 280 goes away, so you have your sales and your COGS and then your gross profit, and you're paying taxes. You can't deduct any of your administrative costs. So with 280E going away, you no longer have to calculate your tax off of gross profit. You're calculating your tax off of operating income. So that cash is king. That cash now no longer needs to be set aside to pay the government. You can use that cash, that capital, to improve invest in your operation. So, and I think with 280E and the descheduling, it allows more software like QuickBooks, right? Technically, you're not supposed to use QuickBooks for cannabis operations. But all steps in improving back office efficiencies with software are one that we would recommend. And AI is playing a big factor in automating that process and making things more simpler. For instance, Bill.com, just simple the accounts payable process. Bill.com is an AI learning tool that processes all of your receivables and your payables through AI. And that's one less person that you need and pay. Even though that we like to employ people and work with people, but if you can automate those processes, you're reducing your operational costs, and you can then reinvest in improving R&D and different types of products that you want to offer to your customers.
Yeah, one of the critical factors for your accounting firm and your tax firm when they're trying to help you tax plan and doing it efficiently is data pull. The more automated and the more functionality you can have in your data pool, the faster and more efficient these projects are going to be able to help you get that end result that you want to get to. So robotics and automation is absolutely critical as you evolve as a business. Like, even small businesses like restaurants, every other industry are starting to leverage this technology because you just have to be competitive. So one of the things in the competitive landscape that we've got to look at for cannabis is how do we evolve similar to other industries? And especially with rescheduling, descheduling is, again, my term. One of the things that we look at there is how, as a cannabis industry, we become a normal business because it gets rid of the 280E complications and disallowances and opens up this whole world for us. So how do we become competitive businesses in the new landscape that opens up for us?
I saw those machines on the floor out in big joint rolling machines and extraction things that are as big as trains and all of that. So you guys don't have that? I mean, no. I think the truth is that it is that those mainstays, things like paychecks and just the sort of services that most companies use. You don't have to have a special marijuana tailored service anymore. You can use the regular one that everyone uses, and that's going to be a lot easier and a lot more efficient for a lot of people, I think, and probably a whole lot cheaper too. and everything else. So I think that you know, I like seeing those big machines. I think that stuff's real fun, but I guess that's not what we're really talking about. We're accountants up here. We're not talking about machines, I guess, right?
I mean, look, the addition of the machines, it's gonna add to the bottom line, but the capital cost, it's much smarter to go ahead and do the software route, I think.
Yeah, yeah.
Yeah, well, overall, I'm really excited about the state of the industry and where the industry is going. And I'm a little bit of a nerd, kind of like Nick would say, because I really geek out on being able to effectively tax plan and utilize all the sections of the tax code to get that best answer for my client, to be able to effectively manage cash, permanently reduce cash tax outlays, permanently reduce the ETR. Those to me are just the things that really make me excited about what I do for a living. So being able to actually take those across the tax code and apply it to cannabis for the first time, that really kind of gets me all jittery and excited.
Yeah, it's been a exciting year, I think, for the whole industry. There's so much that's happened, and you know, in the legal landscape, you know, we also got Chevron went away, right? There's another case out there called Moore. Moore is a case where 4 Supreme Court justices said that income, meaning gain, and realization of that gain, meaning you actually get the cash, is a constitutional requirement. That right there is 4 out of 9 justices that we would think would feel that 280E was just straight up unconstitutional, right? We also have the hemp movement that happened, right? And there's the THCA argument out there and all that fun stuff. And if you're a producer, that might be a good argument for you. If you're a reseller, it doesn't work. You're already decarboxylated by the time it gets in your store, maybe even by the time it leaves the grow facility. So there's a real question there as well. So there's a ton of stuff that has happened in the last couple years suggesting that marijuana really isn't illegal. Yet here the IRS comes out with their you know, hammer notice 2 months ago, right about the same time that all of this other stuff was happening, right? So it's really got us tax lawyers kind of up in arms, right? We're really excited about it, and Will, I share your excitement. It is a lot of things are going to change, and a lot of things are going to open up, and a lot of companies are going to start doing a whole lot better. When I got started, it was long ago in Colorado, right? And there are people in Colorado. You know, we all know what 280E is. I saw the guy ask the question. Nobody raised their hand and said they didn't know what it was, right? Well, guess who didn't know? The pioneers, right? It wasn't understood in the really early days. And those folks are getting killed, right? Because what happened is that they had LLCs, right? You want to start a company, you form an LLC, right? Well, guess what? An LLC is your personal tax liability. And they got started under LLCs, and they woke up to the realization of multi-million-dollar personal 280E tax that they can't get rid of, right? And that's something that we have to solve for moving forward. And I think rescheduling starts to help that process. But it's tough, right? We hear the IRS, they want to collect those dollars. That's going to be a fight that we'll see going on for quite a while, and hopefully we can get some relief. You know, look, I'm an IRS guy for a long time. I was in the IRS when the offshore stuff was happening, right? We gave the offshore folks, guess why they went offshore? To cheat on their taxes, right? We gave them special programs and special relief from those taxes, right? Why can't we do that for these poor, you know, unfortunate pioneers that are stuck with multi-million-dollar liabilities attached to their homes? They lost their spouse, all this stuff because of this terrible thing called 280E. It's been a real tragedy.
Hopefully that rectifies. So we've only got a few minutes left here. We wanted to open up the floor to questions from the audience because we know we covered a lot of things today, and we've covered current and what we expect for future state. And we've thrown a lot of things at you. So we just want to make sure we've opened it up for anybody in the audience that wants to ask a question while we're sitting here or wants to bring up a topic to kind of hear more about that. Please go ahead.
Quick question. Does anyone up there have the ability to quantify what the total 280 revenue is for the federal government on an annual basis in the last 3 years?
It's a big number, right? One company, Trulieve, got $150 million back for 3 years, right? So my guess is it's a few billion.
Probably.
I'm not that great with numbers, though. And yes, I think, the price of legalization is taxes, right? I mean, we see that in every state, right? The federal government's not going to be long behind on that, I'm sure.
Yeah, I don't know that it necessarily means federal excise tax for replacement. I think that they change other areas to increase tax revenue to kind of make up for that. There's always inherently some change. There's pieces of the Tax Cuts and Jobs Act that was passed in 2017 that are actually expiring this year that will increase tax revenue. So, you'll see that, things like that with the 174 capitalization of, R&E type costs, that's a huge revenue raise. So they have other provisions in place that are probably going to offset it a little bit. Overall, I think more of the state of the economy is how do we really get out of the deficit spend, because that's really the true challenge versus the tax revenue. The deficit spending is driving our interest completely in a different direction. You can only tax your people so much and your businesses so much. I do think that there can be some changes on the horizon, depending on what group wins the election in November. There are going to be some policy changes. If you actually go to our website, we have different policies based on each platform. So you could see, hey, like this group would raise the corporate rate to 28%. This group would do that. So it would show you some of those impacts in each of their proposals for tax changes. So I think what's going to really happen is tax will change to bring that revenue in another form or fashion.
One of the things we looked at about 5 years ago was trying to quantify the amount of corporate tax going to Canada based on all the ideas of U.S. companies flowing through the government as a way to kind of entice no federal excise tax and identify a way to generate revenue from the same industry. I wonder if anyone
Most of them are dual filers, so they're really actually paying tax in the U.S. and Canada. So really the U.S. is still getting their share of tax in that situation because of the fact that they're dual resident, dual filers. There'll be a little bit of a foreign tax credit or foreign tax deduction for some of those. A lot of those too were loss entities that were the Canadian filers. So did it have as big of an impact? Probably not.
Yeah.
Go ahead.
You mentioned that the cannabis industry should use QuickBooks, and I just wanted to know what the reasoning behind that was.
Yeah, much like Paychecks or QuickBooks, they don't allow the use of their software for cannabis-related industries. Especially QuickBooks Online, if they know that you're plant touching, that they will discontinue your use. Yeah. So there's alternatives like Sage, Zero, there's other alternatives, but I know that many people in the industry are still using QuickBooks as their primary accounting software because it's cheap and it serves its purpose.
We're illegal, but nobody cares.
I think we got time for one more question. Do we have one more in the audience? Go ahead.
So all the talk about technology has definitely went way up to the CTO, so obviously I'm fighting it a bit. So when we talk about QuickBooks not getting engaged, is it a liability on their part as technology developers who need to be concerned about tax liabilities and things of that sort as we service the cannabis industry?
People can't pay their taxes, they can't pay you, right? Sure, it's a concern. I mean, they're not going to show you that.
Oh, I meant directly.
Yeah. I think it's always a concern. Yeah.
I mean, a lot of it's a similar situation to a lot of accounting firms will not audit cannabis companies because it's an illegal business, and the risk with that is a little bit too high. I honestly, this is my personal opinion, not the thought of a firm or anybody else, but I really believe when descheduling happens, I think all the firms are going to jump in. Not the ones that have always been here like us. I think you're going to see the EYs, the KPMGs. They're going to jump in and go for the large companies You're going to see a lot of the mid-market firms just jump into this space because they haven't historically done it because of risk. And so I think you're going to see an influx of providers, which is going to give you choice. I think you're going to see an influx of lenders, which is going to give you choice. It's going to lower your actual capitalization rate. It's going to provide so many more avenues. It really is an exciting time, and I think you're going to see companies want to work with you. I think QuickBooks drops their piece of not wanting to do it. I think you're going to see a lot more folks jump into this industry and be like, hey, we're here now. So, just be prepared for that. I think that is coming down the pipe. All right, well, that puts us right at time. We really appreciate everybody attending. Thank you. Thank you guys for joining us.